today I want to, oh shit. Hey guys, today I want to go over again about structure and smart money and trading Wyckoff. So as you can see here, we are in a down structure in this image. We have two lower highs. If you see the top lines right here where my mouse is, two lower highs. That should have been down here. Two lower highs. And then we have two lower lows. We're ignoring this one because this isn't lower than the previous low, so we're ignoring this middle one right here. So in total we have two lower highs and two lower lows. Now we have identified structure. Now when you're doing this can either be on the 4-hour time frame for long term and 1 hour. I typically use the 4-hour to view long-term structure, and I use the 1 hour to 2 hour for short-term structure, and sometimes the 30-minute. And you can write that down if you want. So once you have your structure identified, that is one of the most important parts, because when you're trading smart money and when you're trading Wyckoff, that is Wyckoff structure. Okay, so once we have identified our structure, like here is down structure, then if we're going to sell, so we want to be looking at the top of the range to sell here in this image. So if this was live, we would identify 50% of the range. Like if you look to the right, the current range, 50%. The 50% of the range is the middle. We're selling high at least. Now, when you're going up structure, you're buying low. And the reason we're doing this, selling high instead of selling now, is because, for example, if you had an iPhone, would you rather sell an iPhone at $100 or would you rather sell an iPhone at $50? $100 can represent the top of this range, and $50 can represent the bottom of this range. We're selling, so we're going to be selling for the most premium expensive price at the top of the range. And at the top of the range, here is where we identify our imbalance. So we have an imbalance right there, we had an imbalance right there, and we have order block. And so all of these are called points of interest. And our points of interest are order blocks and imbalances and schematics, Wyckoff schematics. But all of this stuff is going to be at the top of the range, at the top of 50% of this range when you identify your structure, if it's going down. And you're taking trades once price hits your points of interest. And sometimes they'll hit your points of interest and go straight down. And some other times they'll hit your points of interest and they'll make a schematic, like a distribution or redistribution, before going down. And the same thing can be done when you're going upward. Let's see, I'm trying to show up structure. So here we have up structure. So we had one high, one low, one higher high, one lower low, one higher high, one lower low, one higher high, one lower low. Now, if you're a beginner, I would practice making this structure on the 1 hour to 2 hour time frame. Some pairs need a lower time frame because some pairs are faster than others and some take longer. So you're going to need to identify your structure using 30-minute structure and up. You could do 4-hour long term. And so for a beginner, this is what you can practice before going into anything else. In the next video, I will talk about order blocks, imbalance, and other stuff like that. But for right now, I want to focus on the basics, which is structure. So like right here, here's another structure, up structure. Swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. Okay? Up structure. Let me see if I can show you a down. I don't think I had a down structure in this current tab. Let's see if we can find one. Here we go. I found one. Ignore everything else on the screen but structure. So we had a high, a low, a high. We had a high, a low, a lower high, and a lower low. And the reason why we use structure like this because it is paired. If you notice, you can see order blocks at the top of each high here in this photo. Okay, and that's letting you know that institutions and banks are pushing price down. Just like when you have high interest rates in the country, when interest rates are high, people typically like to buy because they see everything all green. But when interest rates are high, it's the best time to sell because it's the most expensive and it has a lot of demand. So when interest rates are low, when interest rates are high, I usually look to sell. So this is US dollar, so I was selling here. US dollar, Japanese yen. And then when interest rates are low, I typically look to buy. Now you can look, where you can find interest rates in the Forex market is this site, World Interest Rates Forex Trading, fxstreet.com. If you go to fxstreet.com and you go to World Interest Rates, once it fucking loads, oh my god. Alright. Excuse me, sorry about that. Alright, so it's still loading because my internet's being a booty hole. So we're just gonna read this. So the world interest rate, sorry about that. The world interest rate table. The world interest rates table reflects the current interest rates of the main countries around the world, set by their respective central banks. Rates typically reflect the health of individual economies. Sorry, I just woke up, so I'm a little economies. As in a perfect scenario, central banks tend to raise rates when the economy is growing and therefore instigate inflation. Rate cuts, on the other hand, are a way to stimulate a struggling economy. The table includes actual rates, latest policy changes, and a date of upcoming meetings / decisions for the major ones. Okay, now, the interest rates table is not showing up here because I don't know why. Here it is, now it is, okay. So if we look here, Federal Reserve, that's America, that's where all our money is printed. Our interest rate is one of the highest right now for a lot of countries, except for, down here. But for mainly like North America, Europe, we're kind of in the top. And so because of that, I will be selling. Okay. And hold on, I'm just trying to type something real quick. But yeah. So when you identified your structure, if you would like to, if you're using the 4-hour long-term structure, you can come to this site and pair your structure with the current interest rate. So if the interest rates are high, you're usually going to be in down structure long-term. And if the interest rates are low, like for example, Bank of Japan, you're going to be in the long-term up structure. Now the structure I would use to go with these interest rates would be the 4-hour time frame on TradingView. And that is it today, guys. I just wanted to make a quick video, just explain some basics about structure, and I hope to see you guys in the next video. Thank you.